Hi, I'm Peter Clare. I have spent nearly 50 years in small business taxation. That is, in equal quantities, 25 years with the Inland Revenue and now just over 25 years on my own. As a freelance tax consultant, I call myself a poacher turned gamekeeper, helping small business. I get an enormous amount of pleasure out of reducing people's tax bills and also getting them repayments. I do not use complicated structures. There are so many firms opening up business at the present using complicated structures, but I just look at people's circumstances, look at the law and match the two with some quite good and significant advantages. You will know that evasion is illegal, whereas avoidance is keeps you this side of the prison wall. I want, free of charge, to give you my thoughts on how to save tax in 7 ways, and to do this, if you would kindly, in the collecting box above, just note your name and email address. I will get a PDF off to you with 7 ideas. I'll just quickly go over these 7 ideas so that you know what I have in mind. These are mistakes that I say taxpayers make unwittingly that cost them an awful lot of money. The first big mistake is that many business owners do not consider the strategy of how that business should be run for taxation purposes. What I mean by that is, should the business be run as a sole trader? Should it be run in partnership with the spouse or civil partner? Or should there be a limited company? For everything in life, you plan. If you're going to London for the day, you'll plan the route, the mode of transport, the time, where you're going to stop for meals. So many people in business today have no business plan, and even if they have a business plan, do not directly have a tax plan. That said, they accept their tax bills quite willingly, and in fact quite often significantly overpay tax, whereas using a different entity or a mixture of entities, tax and national insurance, which is a tax by another name, can be saved. Number 2 is not exploiting your family to the fullest extent. What I mean by this is, sorry about that. What I mean by this is that, for example, your children are separate individuals and they have personal allowances and rate bands. Likewise your wife. Now each family's circumstances are totally different and the figures must be done. For example, it's no good paying your wife a salary if already she's paying tax at an employment. The next big mistake is not planning for your death. Now this is the very big one, and I know that you cannot do much about the date of your death, but you certainly can plan to try to reduce the tax payable by your heirs. The 4th mistake is not utilising all the reliefs for capital gains tax, and in that respect the basic one is not to utilise the annual exemption annually and so have a tax-free guaranteed income. But there are other significant advantages by just simply planning your life in accordance with the reliefs that are available from capital gains tax. And this can equally apply to your family circumstances as well as the business circumstances for business owners. Another costly mistake is not paying enough attention when you employ staff to the PAYE regulations, I have seen business owners at probably the wrong time get very large and very unwelcome tax bills. The final mistake is in fact paying too much national insurance. That links with the question of strategy as well, but significant amounts of national insurance can be saved. And bearing in mind, national insurance is just another name for what in effect is a tax. I feel you'll agree with me that these 7 mistakes unwittingly made by most people is good content, and read fully and understood should lead to significant tax savings, and you can obtain this completely free of charge by just in the collection box above noting your name and email address. If you do so, I'll see the PDF get sent immediately. I have enjoyed recording this short video. I sincerely hope you find the PDF useful and will save you tax. Again, please just complete the blocks, complete the box, and I will get you the PDF off immediately. Thank you for listening, and I look forward to talking to you again shortly.